Trend structure can be broken down into two main phases: swing structure and substructure. And if you can understand how to differentiate swing structure from substructure, you can take some brilliant trades and have a better understanding of the market overall. So what's the difference between swing structure and substructure, and how can we use it to our advantage? What you can see here on the screen is a standard trending move. And what we get within a trending move are higher highs and higher lows. This, of course, is a standard uptrend because we can see the market continuing to climb higher, forming those higher highs and higher lows. Of course, if we were in a downtrend, it would actually be printing lower highs and lower lows, and we'd be moving the other way. Now, this is the structure that I like to call the swing structure. Now, swing structure can refer to any time frame. So let's say you were looking at the hourly time frame in this example. This is what we would see. We would see an hourly uptrend or hourly bullish swing structure. However, within the larger swing uptrend, we will actually see smaller substructure downtrends happening on these corrective moves. For reference, trends are made up of two main phases. We have impulses and corrections. An impulse is a move in line with the direction of the trend. So in an uptrend, the upward move will be the impulse. And the pullback move, which is the little pull down lower we get before the next impulse, is called a correction because the market is correcting itself. So within this hourly uptrend, what we will see if we zoom in is a collection of lower time frame uptrends and downtrends within this price action. And that would look something a little like this. So we have the overall swing uptrend, and within that we'll see a progression of smaller waves to the upside. And within the corrective move, we will actually have an entire trend to the downside. So within every uptrend, we will actually see lower time frame downtrends when we start to scale through the time frames. And this is what we call substructure. So the way that we can use substructure to our advantage is to actually trade through these smaller trends within the larger trends that price has formed. So for example, if we were looking at this trend from a buy perspective, we would be looking to buy on the pullbacks. However, what if we got confirmation, such as here, to actually sell the corrective move using valid structure? So that we weren't really trading counter trend, but we were trading pro trend with a lower time frame. Let's head over to the chart and I'll show you an example of this in action. Okay guys, so for our example, we're looking at GBP USD, and here we can see on the 4-hour time frame that the swing structure is bullish, okay, because we have an impulse with a break of structure over the previous highs, then we have a correction, and then we have an impulse, okay? So we have our swing structure intact, and we can see that that is pointing to the upside. Now, what we can do is break down imbalances and supply and demand zones to see where the prime place to buy from would be. And by doing that, I can pretty much see that this area here is the prime high probability buy point for GBP USD if we pull back into this point. Now, if we look previous, we can see we had a demand zone here, which was retested before the trend continued up. So I would say the likelihood of price coming back down here is quite slim. However, the likelihood of price pulling to this area is quite high. So what we would look for is a pullback to this level where we can then buy and take the market higher. So that's the swing structure covered, and that leads us onto the substructure. Where do the substructure trend opportunities come in? Well, we can see that previously we had this corrective move just here. And within this corrective move, we actually saw the market break structure at this point into a lower low, pull back and form a lower high, and then continue forming lower lows and lower highs until the market reversed. So you can see there that on a low enough time frame basis, the market did actually turn into a downtrend just to come and fill back into some of the swing structure. Now, what we can see in the current example is that we've once again had a break of structure here. So this may indicate to us that this is the beginning of a new substructure move. And what we would look for is a substructure pull down towards that demand zone that we marked out for high probability buys. So what we can do now is actually look for the selling opportunities in the new downtrend formed by this substructure break of structure and see if we can find an opportunity to trade down towards that high probability buying point at the bottom of this swing structure move. Something I wanted to share with you very quickly, I'm now trading live with my team every day. So if you want to get access to my fundamental and technical analysis by the week, get all of my trade updates prior to me entering, and trade live with me every day in a network of over 1,000 enthusiastic students, there's a subscription open for that now. I'll see you on the inside. So for this, let's go to the 15-minute time frame and assess the structure from this point. Okay, so now that we're on the lower time frame, we can actually very clearly see this shift in the trend. we had this higher high, higher low, higher high, and as we can see, this higher low is actually now broken into a series of lower lows. So what we would do is look for a high probability area to sell from, and then we can place our sell orders and see if we can ride this down as far through the swing structure move as possible inside of this new substructure downtrend. Now, at a glance, I can see that this area here is quite high probability because we haven't actually retested this level just yet, as you can see by the little gap in the wicks there. So what I would go ahead and do at this point is place our sell order on this point here, put a stop loss over the high, and then we could actually use this trade to target down into that area we were looking at from a substructure perspective. And now, even if this entry doesn't hit, we can simply follow the market down from the point of view of a 15-minute downtrend, because that is what we're now in until we reach some of these high probability areas. Now, of course, because we are counter trend to the larger 4-hour trend, which is going to be the more accurate trend, we should always make sure we are looking at possible reversal points. For example, demand zones like this one, and maybe even this one as well. And in a real scenario, we would be considering taking some profit at these levels, or at least trailing our stop losses and going break even, so that we can maximize our profits regardless of whether the move gets all the way through to the target or not. So for the sake of keeping it neat, I've gone up to the hourly time frame here, and I'm going to monitor whether this is tapped in and whether the trade then fills out to target. Let's take a look. So as you can see there, the market did fill our entry and then consistently traded down through that 15-minute downtrend to fill the target. As you can see, there were also additional supply zones that we could have sold into the market. So now that we've reached this substructure level, what would be our next move? Well, our next move would be focused back on the buy side, along with that 4-hour trend. So what we could do at this point is buy into the market with our stop loss below, and we could target the highs, looking to continue the swing trend once again. So let's see how that goes. And there we have it. You can see a successful substructure trend and a swing structure trending trade using the lower time frame and the higher time frame structure. And that is how you can differentiate substructure and swing structure and profit from trading both. This method should allow you to catch more high probability trades and also give you a better understanding of which trend you should be following right now. I hope that you found this video beneficial. If you have, please drop a like and make sure you subscribe because I post educational videos here every week. Thank you for watching. Make sure you don't forget to check out the free course, and I'll see you in the next video.